Good day. Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 21st of July, 2020. We're at 6 p.m., so we've already got all the markets for the evening session open. There's one market super on fire. Look at what the silver market is doing. You have been up tonight because you're 12 cents off the high already, up nearly $1 an ounce. I think you got a big amount of people caught short. Remember, in futures, for every long there's a short. It's very different than stock market where you get a float of stock and you don't have to have somebody short the stock. You can get short if you can borrow it. In this market, in order to create a contract, the buyer and seller have to come together in theory. Somebody's caught. That's how I'm reading it. Plus, silver's just on a breakout to the upside. We saw a neat rotation today where the market allowed the NASDAQ to pull down and kept the other indices going to the upside. You'll see that in a moment. We have a net build in the API numbers for the energy of about 4 million barrels. That is not a friendly number. Now, the big question is, what's the EIA going to show? And that comes out at 9:30 in the morning. Bonds and notes not breaking. They're in the stock market rally and this big break in the dollar index. Europe overnight and this morning finally made a deal on their bailout and their budget plans and what they're doing. And it's about 1.9 trillion euros from what I'm seeing. That's what I think. I saw reports it's 2.1. I don't know how they're coming to that number, but maybe the numbers I'm reading aren't right. We're in that range of 2 trillion euros. Look at the S&P for the week. You're up 43 points. So if there was any question about this market getting back over this 3161 and ending that down swath that we had, I think that's over. You can see that the market's now just moving back to the upside. The bigger question is it going to clear the 3381 level? Unbelievable, right? When you look at the chart action, bullish. Why? You still have the pattern of higher lows. Yes, this low is under that one. Higher lows, higher highs, bullish. The market is trading over the 18-day average of closes. Therefore, the bias is up, and the 18 is over the 200 as well. So another area that's good. Where's the resistance? The upper Bollinger Band, 32.93 and a quarter. Market made a run today, got up, as you can see, intraday, got to 32.73, did not hit the upper band. So as it gets closer to it, I wouldn't be surprised that if you hit it, you get some solid resistance. Now, you do have an embedded reading. Embedded occurs in the slow stochastic study when the two numbers, they're called a K and a D line, go sideways over 80 for several days or more and stay that way. When that occurs, what I came up with when I learned this phenomena, I took it to the man that developed slow stochastics, is the trade is an aggressive buyer on pullbacks. I think I found the moving average that they often buy. I don't show it here. I show it in my subscription video, and we talk about it each morning on the futures there, and I believe that's a reasonable number that I came up with. So I think they're buying the breaks, looking for the upper Bollinger Band. NASDAQ is not looking like the S&P. It's an overbought market. I know it's in an uptrend, so do you. You've got the higher lows, higher highs, but it is overbought. So as long as you're overbought, I think the trade's moving to the other markets where they have momentum that is locked in. Now, you're not there in the Dow. In the Dow, you still don't have momentum locked in. You have not embedded. I see an overbought market that's now chopping since it hit the upper Bollinger Band right here, and it really hasn't gone anywhere. I'm certainly not in the bear camp, but nor am I telling my subscribers that I think, oh, just jump on board, it's ready to move. Resistance, 27,110, the upper Bollinger Band. In the Russell, overbought market, not embedded. So you hit the upper Bollinger Band, you pull back, the market's trading between the 200-day average, you see this gray line right through here, and that band. It's hard to stay over on these first runs over that 200-day average. We'll see if the market can do it or not, but it's fighting right now for direction. I know it's in an uptrend. I see it. The bias is up, but I'm still telling you it's fighting right there, a battle. In the VIX, I expected that the pros yesterday, when the market got down to the lower Bollinger Band, that what they were doing was writing puts. Well, they went home with a little profit today. Not a lot, but a little bit, and I think they're in the green. I think they're looking for the 18-day average of closes, and no. That is a professional type trade, but that's what I think they're doing. If you go back and you look, each time Recently it's hit that, it's given that. That doesn't mean it's going to again, but the odds favor it until it stops working. You have to assume, or I have to assume, that it's still in play. In the T-bond market, you have momentum sideways, you have bias up, the trend up, and you're in what I call one of these pipes, this sideways action. Interesting that with the stock market rallying as much as it has been, the traders are not driving yields higher. Normally that's what happens. Dollar dropping away, you're not driving yields anywhere. So as I look at this, I just let it sort of play itself out and we'll take it from there. Let's go to the next chart. I'm not going to worry about picking that up. Take a look at the sideways action in the 10-year note. It also is going sideways here, not doing much one way or the other. I don't believe that you trade sideways action like that. Dollar index, you're just riding this market down. How low is low? It can be a big number to the downside. Remember that. We do what's called price counts. And if you ever get them, and we offer them for free, it's one of the offerings that we have. Our first price count was hit to the downside already. Now that you've latched on, remember I told you the Gorilla Glue? I was talking that a lot before I had my foot operation, and now, remember, I just got back this weekend. You can see how this market's just riding this to the downside. Very bearish action when you do that. And are you going to embed? So this is where the market finished today, Tuesday. Evening trade's not open. Day before, both numbers under 20, and the day before, you're embedded. Embedded means that the little rallies or big rallies you get in the market until that red line closes back over 20, I think the pros are going to hit it with both hands. Next target could be the 94 area. Lose the embedded reading, by the way, here. Get that red number over 20, then I think you can make a run potentially back to the 18-day average. Eurocurrency, you know I'm in the bull camp here. I've been telling you, Gorilla Glue, and you're on it. This market just locked itself in with an embedded reading. I think the pros will be buying all the breaks they can in these markets. In the yen, sideways action. You can see how just when you get into this, you get chopped apart. You had a lower low, now a higher high with a move back to the upper Bollinger Band. In my earlier youth, 3 years ago, 3 years ago, I would say, oh, this market's going to break out, I'm going to try to catch it. In my age, 3 years now, I just walk away from those. You're always learning something. Bitcoin caught in that sideways action. So you negated the trend that had been down. Now you have a higher high and a lower low caught in one of those pipes. September Brent versus WTI, still gaining in the Brent versus the WTI. But again, you're in these pipes in this market. You can see it. So I said the API numbers that came out today, I didn't think they were good. 4 million build instead of seeing draws at this time of the year. I'm not impressed at all. If the EIA number is anything like that, that's got to be taken as somewhat bearish. You're down tonight 28 points. The market's not looking at the fundamentals. The market's looking at, can we beat COVID and that'll cure everything. Problem is, we keep hearing from our sources, medical sources, there might be 10 times as many cases as we're thinking. Same in WTI. You can see where the resistance, you're caught in one of those pipes. When you're in those, I tell traders run away as fast as you can. Look at the Rebob, caught in one of these pipes. I don't see a trend in that. Natural gas, downtrend, too oversold for my liking. Doesn't mean they won't see resistance here in the 178 zone. Still bearish. So you put it together, try to come up with game plans, and you have to learn technical studies. If you watch me, you want to learn technical studies, because that's what I'm about. So we've got our volumes 1 and 2 of primers for you. Now they're PDF files. You can print them out. You can see there's stories, there's graphic examples. It's the best ones I have found. And believe me, I scout the internet looking for better ones. I've never seen it. Modern Trader put these together. They're just phenomenal. So as I stay with them, it's not because I can't find something else. I just think they're the best ones. So if you'd like to get them, it's simple, it's free. Just go to our website, www.iraepstein.com, free offers. You'll see everything there, and away you go. I'm Ira. You have a good day, and I will talk to you all tomorrow.